What's up, traders? What's up, investors? Ken here from the Dyslexic Investor, and we are looking at a couple new articles that are coming out. More importantly, we're going to be looking at Mr. Powell here, Jay Powell, Jerome Powell. He's the Fed chairman, and they actually cut rates today. This is quite significant due to the fact of not trying to scare people or fear tactic people. That it's the overall looking at the statement that he wrote. So, said the Fed is not in the role to judge the epidemic of the coronavirus because they're not doctors or health advisors, but they rather isolate the issue with the economic economy from a shock. So they're trying to prevent a particular issue in the sense of things might go kaboom if things get worse. They're trying to lower the rates so they can kind of be proactive instead of reactive. He says, we will get to the other side of this, Powell said, and I fully expect that it will return to solid growth and solid labor markets as well. So those are pretty key outliers here that the Fed chairman's saying is this is just a temporary issue, this will all pass, and everything is going to be hunky-dory. And then we're going to be showing this one little other one here from the Wall Street Bets. Again, not going to be the most DD, but we got the boys at the Wall Street Bets Reddit showing here a couple indicators here of like the first week of October 2018, market blank blood, similar to what happened last week. October 8th, Fed cuts rate by half a percentage, which they did today. October 9th, the largest drop by percentage since the 1930s, which was just like the Friday. Following Monday, largest gain of all time by percentage, just had like yesterday. Tuesday, 10/14, the market drops some, and the WED markets show record drop again. Markets continue to be extremely volatile, hitting a rock bottom 5 months later. So, if you have anything to quite understand this, so what they're saying is, you can take it as whatever you want to say, but that's a lot of if, ands, or buts. There's too many other variables in place to be able to say that. Again, it's just news articles. I need to be very careful on how you read articles and things like that. That being said, the facts are we did have a 15% drop in SPY. Some other markets and equities have been hit significantly harder. A lot of them rebounded quite a bit today. On Monday, Tuesday, and then kind of selling off, Monday, and then kind of coming off today on Tuesday, getting back lower. A great example of this is going to be our beloved Apple, where I can find it right here. Basically dropping from its high nearly 2 weeks ago, dropped about 21%. Basically hitting its 200-day on the daily chart and then bouncing significantly higher, but still closing above its previous day. Did not break this line. You can kind of see I have an alert here. I'm actually going to put an alert higher here, at or above. Didn't close below this, which is good. That would be a technical break if this closed above this. But again, anything can happen overnight. Again, no one has a crystal ball. Everyone's on the same playing field that I know of. They cannot predict the future. So if we go back to SPY here on the charts, I want to show you a couple things. Again, here's on the daily chart. Again, huge, a lot of volume on the way down. You can kind of see here volume is super high. We're going to pump this out to basically 3 years, and then we're hitting not nearly the same amount of volume that we had in February of 18, if you remember that, when the overall non-farm payroll numbers came out that Friday and first week of February, where everything just kind of kapootied and sold off basically for 2 weeks, basically bottoming out fairly fast, and kind of recovered pretty fast, honestly, from that. But what I'm predicting is, and what I'm thinking is, we're going to have to not completely test the bottom, but we're going to need to test a little bit lower than here. Maybe in like a week or two, we could be back down around the 290 level. before we can get out any higher or potentially roll over from that level. That's going to be a very key pivot point for me moving forward. These bounces usually just don't come back straight back. They usually kind of take a little bit to recover. You can kind of see that here on the weekly chart. It gives a little bit better perspective on a longer term view, which is my kind of style investing. You have a slight sell-off, it kind of recovers, bounces back, but then it kind of has to come back down to that level where you should be waiting for your ammunition, creating a nice long candlestick here, long wick, and then just rocketing higher. The only example that I can see here that didn't work very well was in 2018, the December crash that we had, where basically the Fed kind of messes up on that one too, where we had, again, this is all closing. The 8 never crossed above the 21. The 8 was well below the 21 on the weekly. We have not seen that here yet. We could potentially see that coming if this the 8 is continue pointing to the south, and of course with the 21 kind of sloping down as well. But this has been such a drastic move lower, we can see what happens. And then you can kind of give the example here where the 8 doesn't cross over it just slightly, it just cuts through it, and it continues to cut through it, and it has literally no sign of it kind of curving back up because the 21 is starting to roll over too. So the 21 is basically rolling over, which is a sign that we could potentially see this is not the bottom, or there's more to come. So that being said, let's look at a daily chart here again. So this is going to be the RSI, which I use here. I use actually the 20 and 80 level. The default, I believe, is 30 and 70. I kind of bumped those up a little bit to kind of negate any potentially negative signs. So this is a very heavy sign of we were extremely oversold. So that this makes sense for a bounce, completely sense. That doesn't mean that it's going to bounce up back to new all-time highs or anything. It's saying, hold up, pump the brakes, Sally. We need to slow down here. Too fast, too fast, too fast, too soon. So this is on a daily chart, so we're going to pump this down to a weekly chart. We're nowhere near this oversold on the RSI. And if we actually pump that out to a monthly, we're nowhere near that. Like the only time we've ever hit that was in 09 at basically the all-time low. So that being said, like, what do you do from here? This is going to be kind of a difficult thing. I see we could be trading sideways. I think as you can see here on the monthly chart, we're kind of hovering right above the 21 here. I can kind of see us hovering with pretty high volatility months and even weeks, moving up and down. Honestly, it doesn't help that we have the coronavirus going out. It doesn't help that we also have a presidential election this year. So that just adds ifs into the market. So if you know anything about programming, is this is being if statement. If this, if that, we just don't know. The variables are just limitless on what's going to be happening here. Kind of wanted to bring back the Bollinger Bands. So this is on a weekly chart. Been kind of pumping out to the weekly chart just a little bit more than I normally do, just to get a better perspective without letting the day-to-day or the 4-hour charts dictate my overall understanding of where the market's heading. So that being said, you can see here we have not punctured the completely closed outside of the Bollinger Bands, so that's kind of a pretty significant thing too. That also is ideal for a bounce. So I bet you if I pump this to a daily chart, we closed at it for multiple days. Yeah, gapping down, and this is usually what happens if it closes once outside. It's going to continue to kind of bounce down, if not a very sharp turnaround due to the MACD as well. So this MACD crossed over basically on the 21st and just kind of significantly went substantially lower there. So we kind of just need things to slow down, kind of catch its breath, and potentially get ready for a leg lower. Sadly said, but not. So it didn't break the 3 deviation, which is very difficult for a huge SPY to do that. You can see it has done it back in the past. Again, the October to December bear market we had, or downtrend, basically dropping, let's see, percentage points, about 20%. So again, we're only at 15. We could see a potential test for a couple points lower, because this thing has cut over and we could be looking for a lot lower prices in the near future, potentially. Again, no one has a crystal ball. I don't have the crystal ball. I'm just giving my honest opinion on the market and what I'm looking at. A couple other market leaders, the TLT. So the TLT is the 20-year bond ETF, which has been skyrocketing due to this. So investors are flocking to this to get any kind of leverage and to be able to cash their money and so forth into this. So I want to kind of keep a very close eye on this. If this continues makes an all-time high, this is kind of the correlation between this and SPY. So if this goes higher, the SPY should go lower. It's kind of like it's not as popular anymore, but gold and SPY or equities going higher and lower and so forth. There also was a correlation before with the Japanese yen, which I have a hard time doing that as well, because I used to be, so if the yen goes higher, the dollar goes low, or the US markets go lower. So I'm just going to be putting some just random just at their highs and lows if it goes above this, and of course I want to go if it goes below this, because the yen has just been completely destroyed over the years. So this just gives me an indicator to kind of see where the trend and where money is flowing and going. We did get some AMD calls. We did get some shop, which was up nicely yesterday, yesterday into today, and now kind of getting where it was. Not the most productive, but a potential great little mover if the market ever gets up and going. Again, guys, thank you so much for watching. If you have any questions, please leave them down below. This is Ken from the Six Investor, and I'll catch you guys on the flip side. Peace.